Continuing with investment decisions, we're going to do a more complicated problem. You are considering an investment in a gardening business. You estimate that your startup cost will be $160,301.96. You expect rent and electricity charges to be $15,000 per year, payable at the beginning of the year for 7 years. You expect revenues to be $50,000 per year for 7 years, at which time you will sell your equipment for $15,000. Your MARR, or a minimum annual rate of return, is 12%. So we're going to go through this problem, and as we go through it, we are going to learn some of the conventions of businesses. For one thing, we might know our startup costs because we can see exactly how much things are going to cost, but we don't know our rent, electricity, and revenues. Let's go to a reasonable color of pen. Expenses and revenues are estimates. How good estimates they are is going to depend on a lot of things. If you're interested to know how we come up with these numbers, that's what we're going to talk about a little bit more in business statistics. And if you get to continue on into quants, you'll be talking about this again and again. How we might guess, make educated guess to forecast what our expenses and revenues will be. That's getting a little ahead of ourselves though. First, let's start by putting all of our expenses and revenues in on this timeline. Okay, our original startup cost is going to be $160,000, $301.96. I'm going to put this as negative just to show that it's a cost. I'm also writing it in red if you're not colorblind. And then we're going to talk about our expenses. So our expenses are going to be at the beginning of the year. That's going to be $15,000. I'm going to write that here. The worst case scenario is that we have to pay all of our expenses for the year upfront at the beginning. That's the worst it can be. So if it turns out not to be true, we'll be a little bit better off. So this is what we always use. That's very typical. We pretend that all our expenses come at the beginning of the year. So let's write in all of our expenses. For year one, we pay at the very beginning. I'm going to start putting K for 1,000 because I don't have the patience for all of these numbers. Okay, we've got that written in. Put in some little arrows to show that that money, it's going out of our account, but I always call it going into our business. The key thing is we're selling at 7. So that final year is from 6 to 7, we pay all of our expenses up front. So at year 7, we don't have to pay anything. Now let's put in our revenues. They're $50,000 per year. Unlike our expenses, revenues are at the end of the year. I'm going to scroll this up a little. That's the worst case scenario, that we don't get any revenue or any money coming in until the very end of the year. So that's how we're going to run all of our approximations, pretending all of our revenues for the first year come in at year 1. Let's put those in. It just takes a moment. For that final year, which goes from 6 to 7, our expenses come in at the end of the year. So here we have a time with our revenues are coming in at the end of the year. So here we have time with a revenue, but no expenses. Finally, we have what's called the salvage cost. This is very typical. At the end of a business or at the end of our plan, we're going to sell all of our equipment and get a one-time boost of some extra funds, but then we don't have a business anymore. What really happens is at the end of our 7 years, we'll create a new business plan and decide whether to stay with this business or to go on and continue on our own. There's a lot of numbers running around here. So one of the things that I would do first off is add everything up together next to each other. So I'm going to do that in a different color, and I'm going to just write in what all of these numbers are. At time 0, when I add 15,000 and 163.01, I get 175,301.96. 50 minus 15 is 35K. 35K, I'm just gonna put a dot all the way to 35K. And finally, over at 7, we've got 50K plus 15K is going to be 65K. So now I have all of my amounts. So next, what we're going to do is draw a cash flow sheet.